Welcome to the Full of Tracy Monday Daily Commentary. This is Owen Tracy recording. It's 3:16 p.m. that is Central Time, and today is July 24th. Well, I thought we'd kick off today and look at Google because, or Alphabet, they announced their earnings yesterday. They were positive, and then they also increased the amount of money that they expect to spend on AI infrastructure by about 10 billion, and the market didn't seem to like that. And I thought that was rather interesting because there are plenty of other companies that have been rewarded for increasing volume of cash that they're willing to spend on that. And I think maybe what's held back Google is that they are trying to play catch up. So certainly that's worth it. And we're in the middle of earnings, and there are some pretty dynamics right across that are worth taking. Then we also had news today, and they were better than expected. And that also removes some of the pressure on the Federal Reserve to cut interest rates. The 2-year yield was higher by about 3 basis points, the 10-year by just under 2. And we're still locked within range, and that range has been going on for about 3 years already. So what it very clearly emphasizes is that the bull and bear market cases are very finely balanced. Now, when we look at the broader global stock market environment, well, it's still quite steady. And we had a strong holiday yesterday about every market going up, and still a reasonably positive day today. It was up another 1.5%. The IBEX in Spain up 1 1/3. It was a little bit softer for France, Italy, and Switzerland. And certainly the weakness in Switzerland is at least in part due to some of the uh, luxury goods companies not doing as well, even if swashbuckling in a really quite a manner. Then we also had a significant between performance of the S&P 500 and the Dow Jones. And the leading decliners on the Dow Jones were IBM and United Healthcare. And IBM, having been really benefiting from its transition to more of a software rather than a hardware dependency for revenue, was down in quite a dynamic manner today. And a lot of that had to do with their uh, disappointing ability to get cash out of the AI trend despite the investment that they've made in it. And this is going to be a story that ebbs and flows. Let's think a little